guys. Welcome back to another week of Mortgage Matters in Minutes. This is Brent Rasmussen, owner of Mortgage Specialist. Today, we're bringing your 175th episode today, which we have covered quite a ways back in Mortgage Matters of Minutes 50th episode. But today, we're going to give a little bit of twists and updates because the market in real estate and any kind of markets change. They go up, they go down, they do different things. And so today we're going to talk about mortgage rate locks and why it's important to have communication with your loan officer and kind of talking about what the steps are to locking your interest rate, what it means, and how can you go about that. So let's chat real quick today first about what is a rate lock. And a rate lock is a commitment by the lender and of saying, hey, we will give you this interest rate as long as you commit by locking it in. Locking it in really doesn't mean a whole heck of a lot. It doesn't guarantee you to do the loan. It doesn't guarantee that you have a loan per se. What it really means is that there's a hedge that the lender does to ensure that they can grant that rate when the time comes. So you don't own a rate lock. It's really just a verbal agreement that's put in place as a customer service aspect of the transaction. Because what people are more concerned about is if rates go up, but what happens if rates come down? And that's the generality and negativity behind rate locks, is what to do. Because of market volatility, sometimes you do want to rush into locking in an interest rate, because you might think or know that rates are going to go up. But how and what happens if rates go down? And we'll talk a little bit about that here just in a minute as well, too. Obviously, inflation's impact mortgage conditions, stock markets, wars, financial news of unemployment, CPI, PCE. All of these factors are things that we watch, markets that we watch on a regular daily basis, to hopefully anticipate as best as we can what is going to happen with the markets that are going on. And right now, the last 2 or 3 years, it's been very, very challenging for loan officers to know what's next. Between the Fed maybe not making the decisions, with markets doing certain things or not doing certain things, there's a lot going on in regards to what advice we would grant or give if you would lock in your rate. Really, why people want to lock in their rate is because they want to guarantee a sure thing. They want to know that their payment is not going to change or go up. So let's talk about the options that you have to lock in an interest rate. Locks are based on a certain time frame. Generally, we go every 15 days, 15, 30 days, 45 days, 60 days, 75, and 90 days. Those are the different lock timeframes that are options available to us through different lenders that we work with. So if you're closing in less than 30 days, we can grant a 30-day lock, which generally is what gets quoted to you from the beginning when you're doing your pre-approval or looking at costs. You can do a much longer lock as well if you're building a new construction home, from 4 months to 6 months to up to a year even on certain scenarios. So as we look at going longer term on the lock, the higher the rates get, the more expensive the closing costs get, because the risk is higher long term that of uncertainty, like we're seeing in 2025 with everything going on. What's next? Where are things going with markets, with interest rates, housing, so on and so forth? So we want to find out when you're closing so we can get you the best interest rate and match that lock time frame with what the time frame is to process the loan, make sure title gets their work done, the appraisal gets their piece done as well. So when can you lock in an interest rate? When we receive that contract of you buying, or we know approximately when that closing date is, that's when we can determine when to lock. I know a lot of people will just call us and say, I want to lock in an interest rate. But the negative behind that is, if we don't know how long we need it and we lock in that rate and that rate expires, it does no good for anyone in regards to that mortgage transaction. So as soon as you have a certain time frame, whether you're building a new house, whether you're buying a new house, you've agreed to a certain date or time, communicate that with us or your lender to let them know of a time frame they can be watching for locking in that interest rate. We see many times that we get purchase contracts later on than when they were agreed to. And between the time we received the contract and when the contract was accepted, interest rates might have changed. And we don't want that change. We don't want to pass on that change. We don't want to tell clients about that change. We want the best interest rate for them. So the more information we have from you, the buyer, or the real estate agent about what is going on with the time frame, the more we can control and give you better answers, basically. So as soon as you have an accepted contract, let your lender know to get that in front of them to then give you advice. Because the next piece of it is, do we choose to lock in that interest rate right then? Or do we choose to float, which float means the opposite of locking in, riding the market and seeing where rates go, whether that's up or whether that's down. There's different timing and timing aspects to when we should lock in interest rate. Much of the time with volatility, we don't always have the perfect crystal ball. We are following market indices and data information, but it doesn't mean things won't pick up and change the next day. So we can advise you to say, here's all the options that we know that's going on. If you want a sure thing, lock it in. If you would like to play a little bit longer of a term game and see what happens with interest rates, then maybe you choose to float as well too in regards to that interest rate adjusting. If you float, it's just like the stock market. They might go up, they might come down, and we can help guide you. The negative here is at any point in time, anything's possible. Rates can jump, rates can drop. Generally, rates go up faster, then they come back down, and most people choose to want to lock right out of the gate of the beginning so they know they have a sure thing. So what happens if you lock and then rates drop? Well, you're still stuck at that particular locked rate unless rates drop by as much as a quarter or 0.5%. Many a times the lender might meet you in the middle because we can never, again, predict exactly what's going to occur or what's going to happen in regards to interest rates. Also, if you're refinancing your loan, we need to have a little bit longer of a lock because there's a thing called the right to rescind. So we look at these time frames to make sure there's enough days and enough time in regards to that particular rate lock. So that way you can execute the fully loan. The last thing I would share is communication is key. Reaching out to your loan officer and chatting with them. I know once people get their offer accepted, they've spent a lot of time already talking with their real estate agent, spending time looking at the house. But it's more important than ever to then reach out to your loan officer to talk about what interest rates are doing, what can they do, and what should we do about a rate lock? Should we lock in right away or should we not? And those are the conversations that you want to have with us at Mortgage Specialists, because we have 25 years plus experience of seeing markets, seeing what rates are going to do. And every client situation is different. Some individuals are very conservative and want the sure thing. Some are a little bit more of gamblers and would like to see if we can get a better rate and catch a good day. And then there's people in between that aren't sure what to do. So we've helped all of those clients. And while we're never, ever going to be able to get you the perfect day, no one can time any market perfectly, we're going to at least give you the facts and what we know is going on and the understanding of what the conversation is about what could possibly happen here moving forward. We would love an opportunity to assist with your mortgage. Just reach out to us anytime at 402-991-5153. Hit that like and subscribe button below. Check us out each and every week for factual, accurate mortgage and real estate information in regards to the Omaha and Nebraska area. Or you can check us out at our website at mtg-specialist.com. And we will see you all here next week. Have a great one. Mortgage Specialists. Driven, trusted, reliable.